The countdown is on as Tata Motors is set to complete its much-awaited demerger in just a few hours. Now, starting today, the company will split into two separate listed entities, marking a historic restructuring in India's auto sector. Now, post the demerger, one company will manage the commercial vehicle division while the other will focus on passenger vehicles, including electric vehicle operations and the iconic Jaguar Land Rover brand. Now, under the demerger scheme, Tata Motors' commercial vehicle business will be carved out into a new entity called TML Commercial Vehicles Limited, or TML-CV. The passenger vehicle operation will continue under Tata Motors, which will be renamed Tata Motors Passenger Vehicle Limited. Now, for the shareholders, what does this mean? It means that shareholders will benefit from a 1:1 share entitlement ratio. This means for every Tata Motors share that they own today, they will receive one fully paid up share of 2 rupees in Tata Motors Limited commercial vehicles. The scheme also includes the transfer of non-convertible debentures worth 2,300 crore rupees to the commercial vehicle entity, which is expected to be listed separately in the markets by the month of November. The split, which is likely to come into effect today, the 1:1 split on Tata Motors commercial vehicles as well as passenger vehicles, just explain to our viewers, those who are invested in Tata Motors, what it means for them and what their strategy should be at a time when a demerger is on the cards.
Karthik, I'm actually not qualified to comment on a specific stock.
Sure.
So I can only tell you about auto sector. Auto has been one of the sectors which has gone through a reasonable grind of downward movement over the last 1 year, because their earnings, Nifty Auto earnings, degrew by about 2.7%, if I remember right, for FY25. So if you are owning any auto stock for that matter, I think they are at reasonable valuations. If you look at the mean and median PE of Nifty Auto, you would see that we are trading at lower than 1 sigma of the mean and median PE of Nifty Auto. So coming back, I think Auto will have the capacity to beat Nifty by about 5% per annum over the next 2-3 years. So that's what Auto has in store for you. Of course, a split does not have too much in any corporate for that matter. Split is not a very important corporate action, because you don't even get the tax benefit of Section 94(8), unlike in a bonus where you can actually claim tax losses provided you hold it 3 months prior to the bonus record date or 9 months after. So it's a lower of a corporate event, so does not have the tendency to induce demand and supply as much. So I think you should, if you bought that business, you should stay on because the sector is going to get some tailwinds.
Okay, but historically, at least in the recent past, I think the two headline events of a demerger that come to mind happen to be Reliance, which flanked off JFS as a separate division, and then ITC that demerged the hotels business. So for the investors, once that split is through and they get an equivalent amount of shares, or in whatever ratio the split happens, as far as investor wealth goes, is it prudent to stay invested in both the splitted stocks, or is it better to then pick and choose which one you derive more value from, or you expect to derive more value from?
I think, yes, absolutely. See, I think, like I said, split of a share is not such an important corporate event, but demerger and a separate company being carved out is a very, very important corporate event. And when it comes to two different kinds, like you said, Reliance and Reliance Jio getting demerged from Reliance Industries was one of the latest big ones, apart from the ITC. When that happens, I would say that the new stock which emerges requires a certain degree of stability to come in. So I think if you are a long-term investor, you should not hurry selling it. Now, for example, in India, the tendency to own a new share for a long periods of time doesn't exist. Let me give you an example of our own companies, Anand Rathi Stock Broking Limited. The volume on the first day was upwards of 2 crore shares. But the number of shares which were actually issued in the primary round of IPO was lesser than 2 crore shares. So that implies whatever you put as a free float turned once in one day. So to answer your question, Karthik, not just for this demerger, any demerger, if you're a long-term investor, the devil lies in the detail. Don't hurry up to sell something. If you're not going to sell the primary share which you had in the first place, don't be in a hurry to sell the second one. The demand and supply of the short-term traders dictates the price, which is not at all business dependent.